Hey folks, David Frost, mystrategicforecast.com. You're here for another episode of Common Sense Market Analysis. Today is, what is it? Wednesday, June 3, 2015. Okay, so here's the ES contract. And by the way, we'll go over the ES and the S&P today. We'll talk about gold, which is pain in the neck. We'll talk about the bond market, oil. I've got an idea on another commodity I hardly ever talk about, or maybe never have talked about. The dollar. Sorry I didn't make an agenda tonight. That's why I'm running through this. Then we're going to talk about some stocks, and this is by request, so it makes all the sense in the world. I told you I'm going to talk about a couple of stocks, maybe 2 or 3 stocks every night that are on the in the portfolio, but somebody made a very good point, and they said, how about talking about the stocks that are having a little bit of trouble? And that was an excellent point, and we're going to do exactly that tonight. And then I'm going to talk about 2 other ones, one by request and one that's on my radar screen, and then and we'll give it a wrap. So, as you can see, I'm flexible. I'll talk about almost anything you want me to talk about. I don't have a problem. Listen, if I shape the service the way the membership wants it to be, you'll never leave. So that's the way I'm looking at it. I want to make it into a community. So what do we have? So ES, it was an interesting day today in terms of how the market traded intraday. The market was really intraday. It kind of went to, or at least in the direction of some numbers that I anticipated it going in. And on the downside, we found support in and around the number I thought we would, and we bounced up. And there was somewhat of a bullish nature under the market, and it was what I would like to call a trend day up. I think it could have been a better trend day up if some other conditions were met, but nevertheless, it was an important day, and I'm going to tell you why, because this is the hourly chart. So look where we closed, right in the afternoon. All of a sudden, we were hovering below 2115, and all day long, when we broke through it and we got below 2115, this was early this morning. This was at noontime, and then we made a low of 2109 and then started back up. And the reason why I bring this up and the intraday stuff is because it's important, because the fact that we didn't need to go down today to test the 2105 when they had every opportunity, when the market was weak. It was weak overnight, and it didn't get there overnight, and it was weak this morning, and they had every opportunity to send it down another, 3, 4, 5 points just to touch on the 2105 that we know is an important number, okay, but they didn't do it, so that tells me that's bullish, okay, so, the market had a decent close, and it's how we close them, not how we open them, not how we trade them, it's how we close them. And we closed them pretty well today. So all in all, it was a pretty bullish day, and I think that it's going to remain that way. Now, remember, let's go back to, in fact, I'm going to flip over to the SPY. I'm going to go back and forth a little bit here because something important before I forget to do this. See this triangle that I drew, and remember when I said as long as the market got above this downsloping trend line, that's going to be positive, right? Well, what happened? This is 10:30 this morning. We're above that trend line, and we broke through it later in the day, later in the morning, but came right back above it. So I do think it's important, and I think it was smart to have drawn this trend line in there because I do think the market thinks it's important. So, and remember I also said that a lot of times these triangle patterns will break from the direction from which they came. Down move, triangle, another down move. And then I said it really doesn't work all that much and I don't really do anything with it. Well, it didn't work. So I like the fact that we're above this trend line, and I think there's higher prices ahead. And, here's another bogey for you. You know that if the S&P SPY gets down below this trend line back into this triangle pattern again, I wouldn't like it. I wouldn't think that would be good information. Or I would think it would be good information that it's there. I don't think it would be good information that it was there. So that's just of importance. It's something I'm watching, and I think it's good to note, and that's why I wanted to go talk about the SPY. Here's another thing. We talk about I gave you the numbers on the bullish, the reason for the bullish sentiment in my book for the ES contract. Well, here's the SPY contract, and you couldn't even get down here. Okay, this was 209.74. I'm sorry, that was the other day. Here, 211.20, that's the number. So as long as you stayed above this trend line, you were not going down to the 211.20. Couldn't get there today. Had every opportunity, just like the ES. Couldn't get to the 211.20, which is an important line in my book. So therefore, I think there's bullish behavior going on here. I'm going to go back to the daily chart, but I'm going to do it on the ES. Okay, sorry to flip around, but you get the same point. Now what I'm going to tell you is what I think is going to happen, so it doesn't really matter which chart I've got up on the screen, right? So 21.15, 21.23. I sound like a broken record already, but the numbers haven't changed. And 21.23, in fact, the numbers will change on the weekly close, but if we close positive on the week, they will change. They will begin to move higher because there is an uptrend. And remember, let's go one more chart. I'm sorry, but this is important. Let's try and focus out all these lines. Just try and ignore the lines. I just want you to see something. The red line upsloping is the 20-period moving average. Okay, that line is at, let's see, where is it? I think I can click on that line and highlight it. Yeah, I can do it down here. No, it's not doing it. Wow, there it is. 2079.93. It's 2080. This is the ES contract. 2080. So, the point I want to make is, okay, the market, pardon me, what did I give you just now? 2080? Yeah, 2080. Okay, sorry. Okay, so on a daily chart, all right, if we go to the daily chart, where's 2080? It's all the way down here, okay? So the market has all this room, if we should fall farther, on the downside while still maintaining a bullish stance on the weekly chart. And by the way, it could come and touch that and not close below it and still remain bullish. Okay, so my point is, this is why I don't get real nervous and real panicked when we have these down days, is because, you know, as long as the market stays above that 20-period moving average on the weekly, I consider it bullish. And on the flip side, okay, what this is telling me here, and if we don't continue up, okay, and we don't close above, okay, 21.27 anytime soon, okay, and there's other numbers here, like this one here is where I get 21.23, but then the next one is 21.27. So even though we can clear 21.23, we've got to close above 21.27 on an hourly and certainly daily closing basis for this market to get into a bullish position, to get going on the upside, to get back above 21.34, which was the high, and beyond. In order for that to happen, we've got to clear 21.23 and we've got to clear 21.27. So there's a lot of work to be done, because if we don't clear these numbers, and the more time that passes without clearing those numbers, the more susceptible, easy for him to say, the more susceptible the market will be to go down to the 2080 and test that 20-period weekly moving average. And that's my story in the S&P tonight. Okay, gold. Gold is really a pain in the neck. It is not doing what I thought it should do, what I thought it would do, and what I would like it to do. And that's the story. I said, it's very funny. I said, it's almost ironic that I just said that, because I've been saying that I had to close above 1194 to be in a bullish position. We didn't close above 1194, and we went lower, and I look surprised. I'm not really surprised. I just thought we would move higher. I had higher prices coming, and I still think they're possible. And I still think as long as we maintain above these lows here, 1175, that there's some chance for those higher prices. And whether they happen now or we have to be postponed into later June or maybe even July, we're still going to see higher prices. It's just been a very, very tough market to trade. That just goes without saying. It just is what it is. Some markets are easier to trade than others. You know, you've seen the success that we've had trading oil. Nowhere near the success we've had trading gold. I don't think anybody's success trading gold. It's been very, very difficult to trade. Hence, not trading it a lot. But oil's been a different story. Now, I thought we would take a run up at the top end of this channel, but we had a pause day, we had a down day. It was more than a pause day. It was a down day. It was a pretty good one at that. So the fact that the day closed below this low here, okay, 60.09, the fact that we closed below that tells me we're susceptible to more downside. And this still may just be a pullback in and still an uptrend. So there's nothing wrong with the oil market. Can we come down to the bottom part of this channel? Yeah. Do I think we will right now? No, I would think that at present, this may be just a daily pullback, which could mean, 2, 3, 4 days of downside sideways consolidation. And if that happens, where would we go? What did we do today? I didn't measure this out today. Let's do it now. We came into the 382. What a shocker. Pierced through it, went to the 200 period moving average on the hourly chart and back up to the 382. Oh my God, this is the look of surprise. No, it's not. These numbers are important. They're always going to be important. They always have been important, okay? But can we come down to the 618 or the 50? Absolutely. On a daily basis, would that mean that we've changed trend? No, it wouldn't. So I still think there can be higher prices in oil. And I think there's, if you want to link it to the dollar, I know we had that long discussion last night about the dollar and oil, but, and this is a good example today. The dollar was down and oil was down, so they're not correlated today, but they were correlated the other day. So, it's a perfect example, but if we saw a rally in the dollar and people decided to link them together, that could spell trouble for oil. But I don't think there's any trouble. I think it's just a pullback. I just think it's a pullback and a larger uptrend. I don't think we've seen the highs on this move that we're going to see in oil. So I guess that's what I'm trying to say in a nutshell. That's oil. There's nothing to do right now. There's no short. There's no long. You got to wait for the market. If we came down to the 618 and made a bottoming signal, that would be a potential long trade for oil. But I'm going to wait for that to take place before anything else. So we did gold, we did the market, we did oil. Let's talk about the transports. I'm going to go back to the market. And the reason, sorry to jump around, but the reason, it just caught my eye. The reason I want to talk about the transports is because in the hourly chart, it's very, very bullish. This is bullish behavior. A large up move with sideways to downward consolidation normally means the market wants to make another move higher. Okay, you can see that kind of pattern here. That pattern failed here, okay? But it happens a lot, So this up move, because we were in a downtrend. But if you go to a longer time frame, let's go to a daily chart on the transportation average. And, this was a choppy market. You don't see a lot of bullish patterns in a downtrend. That's the problem. That's why it's a downtrend. This bearish pattern, down move, sideways down, okay? Down move, retrace 50%, down move, retrace 75% from this. I mean, it happens over and over again with these Fibonacci levels. And anyway, so the point I want to make here is look at this low, 83.15. I had this line in for you long before this number was hit, long before, probably up here somewhere. And the number was hit, and now look at this move, 83.15. We're at 85.10. That's a pretty good move, almost a 200-point move on the transports in just a matter of a couple of days. So I don't think we're done. I think we came into the 20-period moving average on a daily basis. I think that was enough to pause the market, but in no way, shape, or form, as long as the market is going to be bullish, do I think this is done. And I said it over the last few days. The stock market is not going to be able to move without the transports and without the financials and some other sectors. So I know that there's been a lot of people thinking the transports had a death cross. CNBC was talking about a death cross. You know when they were talking about a death cross? Right here, okay, on the 29th, on the 28th. That's when they were talking about a death cross. And that's when I was telling you to buy this line, okay? It's unbelievable. Unbelievable how they do that time and time again. Okay, let's move on. Bonds. Crushed. TLT. Now, this is a good one. I mean, by the way, not a lot changed in the markets today, but it's just, I enjoy talking about this stuff. So if you're okay with listening, I'm just going to keep repeating some of the same stuff night after night, because when there's not a lot changing, I have nothing else to say. So I either skip the market or kind of reiterate or try and expand on some of the items that I was talking about. So here it is. Last night, I said that we almost touched this line, which was really the reason I didn't take this trade here. But then I was sorry I didn't when we bounced back up, and then we came back down. And then last night, I know I told you that we were that this line was susceptible not to hold because we were here too many times. And you don't want, it's kind of like having your cake and eating it too. Too many bites at the apple, too many hands in the cookie jar, all that stuff. And that's just trouble, and that's what happens. So I do think we're probably going to find somewhat of a short-term bottom here, and I don't know if it's going to be all the way down at 115.43. I just know that to be a mathematical level, and this was also a mathematical level that I deemed important. It's important in my work, but these levels, sometimes they don't get hit. So I would say that anybody that was looking to be on the long side of the bond market could start looking now, but I'm not, and this was on volume too today, I'm not looking until I see a signal because I'm not looking to get in front of a freight train. It just doesn't make sense. I don't need to. There's other markets, other stocks, other markets that are setting up in a bullish manner. So unless I have a spectacular level like this would have been here, right? If this candle hit this purple line here, I'd have been all over it with three hands. But it didn't happen, and I shied away from it here, and I was going nowhere near it here. So we may or may not get down to this level, but what my point I'm trying to make is you're going to find low pretty soon here, and what I would love to have happen, and you know what I like to have happen to find a low, I really would like to have the market flush out, throw up in the morning, okay, maybe even touch this line and reverse on volume, and that I would be all over that. Jump on board. Jump on board because you'll have a multi-week rally. I think that's what would be in the cards at this point. So, but if you're an Elliott Wave guy or girl, you may take a look at this. 1, 2, 3, 4, 5, and 5 should probably go lower. So that could be the case, and that's not an exact science, and I'm not an Elliott Wave person. I understand the Elliott Wave theory. I just don't use it a lot. But sometimes the waves stand out more than others. And, first you would have said this is a 1. I'm sure everybody was saying this was 1, 2, 3, 4, 5, but that's not the case. It's really 1, 2, 3, 4, 5, I guess. I don't really know. I don't really care. I don't think Elliott Wave has much value, at least to me anyway. There's too many interpretations of it. 5 Elliott Waves analysts give you 7 answers. All right, let's talk about, I told you I was going to give you another market. I'll give you this to you real quick, and then we'll get on to some stocks and the dollar. We'll do the dollar first. Corn. I think this is a market that looks like shit. Pardon me. It looks like not good. And what I mean by that is you had a little bit of a bounce up here into the 20-period moving average. You're probably not going to close above 23.47. This is the ETF for corn, and you probably can't short this, but I think there are options on it. I don't recommend playing options on this. The spread is too wide. But if you're a futures player, then you can take a short in corn. But this is just food for thought. I think this market looks terrible. Look at the weekly chart. Downtrend, you're below all the moving averages. You're hovering into a double bottom here. And if this doesn't hold, so if you close below 22.62 on a weekly basis, then I think it's going to go a lot lower. And that's just something I wanted to point out. And the reason I wanted to point out is because on a daily basis, I don't even know how much more upside there is on a daily basis. If you can't get through the 20 and close above that, that just looks real weak. All right, let's do the dollar. I'll start running through this stuff. The dollar got hit again, and I never was convinced that the low was in here, and I'm not convinced that that we're not going to see higher prices either right now. But we're doing stuff. We're making retracements where the market's moving, and I'm watching it, and I'm looking for a pattern. I'm looking for a signal. I'm looking for the market to tell me what to do. I'm long the dollar in the portfolio, but I'm long for a long-term basis. I'm looking for much higher prices that you all know about later in the year. But right now, for a trade, there's a possibility that we could have a trade coming up here pretty quickly for maybe a few day bounce. So I'm watching, but I'm not going to say any more about it right now. It doesn't make any sense. So let's see. All right, let's go through some stocks. By request, let's talk about GMCR. Okay. So GMCR is a stock that I've played many, many times, and I've played it recently, as a matter of fact. As a matter of fact, I featured it in the gap trading video, I think. Yeah, I'm pretty sure I did. Well, that's why I think that it wasn't. Yeah, it was this line. So obviously, well, not obviously. I don't know which side the person that wanted me to go over GMCR. I don't know whether there's a short or a long going on here, but I'll give you my opinion. So it's an unbiased opinion. You're into a lot of support on the weekly chart basis. Okay, so you that was one of the reasons for this this pivot here and this gap play. Is there's a lot of weekly chart support here, but you're not holding it. But your safety net is also the 200 period moving average, which is underneath that. And then if I do if I just zoom out on a monthly basis, and I'm doing this real time. I didn't really do this ahead of time. I want to do it real time. I want you to see this is what I do. I mean, this is how I look at this stuff. Obviously, I look at a lot more stuff, but when I just do Fibonacci's, that's what I do. And then if I want to hone in on the number, then I'll go and get the exact number so I know to the penny where it's going to go. But for now, this is good enough, and you can see where that number came from, right? That number on the purple line, which was the gap play, came from the Fibonacci retracement on the monthly chart, right? Okay, so that cat's out of the bag. And so, you know, what I would say is you have the 200 period moving average, but, okay, if the stock started moving lower now and it didn't look like it was going to get support before this week was out and it looked like it was going to head down to the 200 period moving average, then I think that it's more likely than not than the 618 would act as a magnet. It would act as support, but it would act as a magnet, and I don't know that this market would stop so abruptly at the 200 period moving average on the monthly. You'd get a pause for days or even weeks, but remember, I'm looking at a monthly chart, which is each one of these bars is another month, so this stuff takes a long time to play out. But if you're looking on a shorter term basis, you know, if we zoom out a little bit, your 618 on a weekly chart basis, I'm sorry, that's the same number. Pardon me. You know, 78.34 is good chart support, but I wouldn't be long this market. And here's the reason why. You have, on a weekly basis, you have the 50 period moving average rolling over. You have a downsloping 20 period moving average. And there's a whole lot of other stuff that looks a whole lot better than GMCR. On a daily chart, every single time frame is rolling over and downtrending. So even though these numbers look enticing because they're close by, you know, the probabilities begin to increase that you go to the next lower number when the moving averages are moving down. So I hope that helps. I don't like GMCR. It doesn't look good. All right, let's look at, I'm going to look at some stocks in the portfolio. So let's start with natural gas. That's not what I wanted. I'm just going to actually get the actual futures contract itself, and we'll talk about purely natural gas. Now, I don't think it looks good. I think it looks good on a short-term basis. I think this level, if it holds, this will act as support, and you get a multi-day bounce. But when I zoom out on a longer-term basis, okay, and this is why we're short natural gas in the portfolio. I mean, again, downsloping average, moving averages. It just looks weak. It looks like it wants to move lower. And when I see a stock that wants to, what's good here? I mean, there's just nothing good here. In order for me to get interested in natural gas on a monthly basis, I mean, you're going to have to get over 317 on a closing basis for the month in order for me to think that the trend could begin to turn upward. So that's why we're short natural gas in the portfolio. Let's look at SSYS. I know this is a favorite. I'm watching. Believe me, I'm watching this one. I trade this one throughout the day from time to time, and I also trade DDD throughout the day of recent. which is 3D Systems, because these 3D printing stocks tend to move. And this is an ugly chart on a daily basis, but when you go intraday, okay, this thing moves, right? So I know it doesn't look great on the longer term basis, on the daily chart. I know this looks tough, but this could be carving out a bottom. And there's other things I'm looking at that aren't prevalent in this chart to tell me that. But when I go to the hourly, I can give you the line in the sand, okay? On an hourly basis, all right, for now, if you're long the stock and you're in some pain, you don't want it anymore, okay, for whatever your reason is, okay, if we close below this low here, okay, at 34.97, so say on an hourly basis, a close below 35 would begin to show up as bearish, okay, but that doesn't mean the stock is bearish, okay, yet. All right, I know it's below the moving averages, but I'm in the camp of there's higher prices in the 3D stocks, 3D Systems, and Stratasys. And here's the deal: if they're going to move quickly, and they're going to move with the market. And if the market's going to move, it's got to get going. So hold on to SSYS for now. We'll know pretty soon whether this whole thing's going to break down, or if I'm right and we're going to get one last push up higher, and at the push up higher, all the stocks will get taken with it. And that's just the way it works, right? JCP. Let's look at JCP. So JCP had a good day. Bullish chart. Let's go to the daily. Okay. As long as we stay up in these levels here, above these levels, I like the chart. It is bullish. If I zoom out on a weekly basis, it's not as bullish. And here's what you have. Okay, so here's where we do some work. You may take a run at this double top, and I don't know that I'm counting on double top, but I'm looking at it. All right, this double top here. All right, but the major sticking point is this week here, where you had high volume, and the high of the week is $10, okay? I think you're going to challenge that week, and here's why. Because you see this stair step, you see this big up move, and then we consolidated for a while, then we had another big up candle, then we're consolidating for a while. I'm looking for at least one more big up candle, and it's all time, right? We're running out of time because the market's going to run out of time in a month or two, okay? But within that time, if we do get a lift in the market, we should get a lift in everything. And if we get a lift in everything, that next push is going to challenge this high here at $10. So that's why I'm hanging on to JCP. Walmart's in tough shape, okay? Walmart had a decent day today. If we go to the intraday, it tried to make a move. It's struggling. But I think Walmart will also get a lift when the market gets a lift, when and if the market gets a lift. But I'm going to go to the longer time frame, and I'm going to show you what I'm looking at. So a little early in Walmart, I thought it would hold at higher levels, but we're close. We're only, what are we? We're 2% off in Walmart. That's not a big deal. But I did think higher levels would hold. But nevertheless, in the safety net is the 382 here on the weekly chart. So it's 72.25 is the weekly chart. 382, so I don't even think we're going to get there, but I'm just saying there's kind of a safety net there, and I think this is turning up. So I know it's bearish, I know we're below the moving averages, but if the market's going to get a lift, it's kind of like this. Sometimes we buy charts that look bullish, and sometimes we buy charts that are into support. And Walmart was into support. It didn't look bullish, but it was into support. So, I know I don't want you to think both ways. Well, how come sometimes he said this looks bearish, you wouldn't buy it, yet he's buying the one that looks bearish? Well, there's two ways to buy. There's buy charts that look like bullish setups, and then I buy charts that are into support, and then I use other factors to tell me that it's a good buy or not. So that's kind of the short story in that. So I'm going to look at two more real quick. Soda, which is a chart that I know some of you own because I've gotten emails on it, and I own it, and I own all that stuff, but I've owned Soda for a long time, and we've had it too long is probably is the point. We've had it since April 9th, and this is bullish, okay? So we had this up move and we're consolidating, and this is on a daily chart. So when does it get bearish? It gets bearish on a close below the 50-period moving average at 2050. And I know that's a ways away, but that's where it gets bearish. It starts to get bearish on a close below the 20 at 2140, right? So, but we have to, if we break above the 200-period moving average, which is this downsloping trend line here, then I think we shoot up to 24.25, and that's kind of where I'm looking at here. I'm looking at 24.25 for Sodastream. It's interesting. Soda, you're not getting up this high, by the way. You're not getting there, but I am looking up in this area here at some of this. This will be resistance here. I'm looking up here at this 50-period moving average, and then maybe challenge this high here at 26 and a quarter. I don't know if we get that high, but that's what I'm looking at. So you can see this is making a bullish pattern here after this up move. We tested the low, right? We made the low, it bounced off the low, and now we're going higher on volume, right? This was on volume, and that's what we look for. So this is bullish consolidation. We're going higher. Let's go to FXP, which is the Chinese market. And I know China's been tough. It's been a tough trade. It was a tough trade. I'll give you that. There's no doubt about it. But I just didn't think China would remain as buoyant as it has for as long as it has. It's going to come in. There's no doubt about it. I don't know if we'll have FXP, can't say FXP, in the portfolio for that long, but it will come down. I just don't want to catch another, I don't want to get squeezed up another 1,000 points in the Chinese market. So if you look at FXI, okay, FXI on a weekly basis, you know, could be making a bullish pattern here, although this is very, very bearish. So I'm conflicted, because as long as you stay inside this big up move here, it's bullish, but this big down move was bearish. So I'm kind of looking for one more into the 20, and then I'll probably unload FXP. That's kind of where my head is on that. That's it. That's a long video, so my apologies. And I know some of you keep telling me it's not too long because you like listening to the market stuff. I know that, but I know there's some folks out there who would rather just give it a wrap. But either way, we'll do both. We'll do short ones and long ones. I'm David Frost, mystrategicforecast.com. Tell me what you want. Send me feedback. Tell me how I'm doing. And we'll see you tomorrow night, or we'll speak to you tomorrow night. And hope everybody has a great evening. mystrategicforecast.com, David Frost.